William Hill managed to beat its own expectations on full-year profit today after the government rolled out a £2 million betting limit, but warned of a possible £10 million hit from an impending credit card ban. Read more. William Hill boosts US reach as it strikes media deal with CBS SportsThe. FiguresWilliam Hill's adjusted operating profit fell 37% year-on-year to £147 million, ahead of management guidance of £143 million. But the bookmaker made a loss before tax of £37.6 million on a statutory basis on charges of £134.1 million. That was mostly due to the closure of shops and mass redundancies after the government slashed the fixed odds betting limit from £100 to £2 last year. There was much narrowed from 2018's £722 million loss after William Hill took a massive impairment charge to prepare for the regulatory change. Net revenue slipped 2% to £1.58 billion while operating cash flow fell 7% year-on-year to £183 million. Net debt rose to £535.7 million after William Hill bought Swedish gaming site Mr. Green for £242 million in 2019. Investors suffered a loss per share of 3.1p, though that was much better than 2018's 83.6p loss per share. Still, William Hill booked a 33% plunge in its dividend from 12p to 8p per share.Why it's interesting William Hill's progress has been rocked by the government's strict crackdown on gambling over the last year. And April's incoming ban on using credit cards to put down stakes will cost William Hill between £5 million and £10 million, the firm said today. Credit card payments produce around 5% of the company's online revenue. Read more. CMA opens probe into Flutter's £10 billion Stars Group betting merger. The acquisition of Mr. Green pushed operating costs up 19%. But William Hill said the newly acquired company has performed in line with expectations and has resulted in £4 million of cost synergies so far. Meanwhile, it helped gaming net revenue rise 36%. Amid the UK's betting crackdown, William Hill and rivals have been expanding into the US, where sports betting rules have been relaxed. The bookie struck a media partnership with CBS Sports early this month, and today it said it would kick off integrations in March for the American fantasy football season. What William Hill said. Chief Executive Ulrich Bengtsson said: 2019 was a year of transition during which we executed on our ambition to diversify internationally with the acquisition of Mr. Green and the continued strong growth of our US business. The group delivered a strong operating performance, ahead of our expectations and against a challenging regulatory backdrop. We move into 2020 in a stronger position. Almost a quarter of revenue is now generated outside the UK compared to 15% in 2018. We made positive progress with our digital platform, launching our purpose-built platform in the US and product developments in the online business in 2019. We will invest in our proprietary technology as we continue to. For more on this story, visit the news article link.